Hey guys, Toby Mathis here, and today I'm going to be talking about creating a tax-free side gig. Now, when I say a side gig, I mean basically a second job or business on the side in addition to your primary employment. So I don't think we've ever been in a situation where there's been a higher prevalence of people having two or more jobs in the United States. Like we have a lot of folks right now that have a primary job and a secondary job. And in some cases, especially for the folks in a high income tax state or expensive place like Hawaii, it might be three jobs. California might be three jobs. New York might be three jobs. But realistically, it's a lot of people right now doing that second job. And so I'm going to caution you, if you do not have a business and you are not able to take some of the expenses you have on a day-to-day basis and create a deduction out of them, you may be better off thinking about doing a tax-free side gig. And now, what do I mean by tax-free? I don't mean that it's an exempt activity. We're not setting up a charity. What I am saying is that if you make an extra $10,000 or $20,000 a year, you may be able to get that money to yourself in a manner to where it is not taxable, which is why I say tax-free. Now, before you think the IRS is going to show up and go crazy on you, no, you have to understand how the rules work whenever it comes to business. There are different types of income. In your case, if you have a side gig, you are making earned ordinary income. What does that mean? It means it is subject to ordinary income tax and it is subject to employment taxes, which are Social Security taxes, FICA, self-employment, whatever you want to call it. It's old age disability and survivors and Medicare. It adds up to 15.3% on every dollar. So what becomes really important is how you set that business up. And so I'm going to give you a very simple solution. If you have a small side gig and it is being paid via a 1099, in other words, you are making your money either as a consultant, or maybe you're on Upwork, or maybe you've set up a small business and you're following some of our friends that we like to do. Maybe you're wholesaling, maybe you're flipping manufactured homes, which we love to do. Maybe you have an online business, a little cash flow machine where you're selling a residual product or something that's subscription based. Whatever the case, if that money, when it comes in, would be 1099 to you or earned income, you're materially participating, you're the one doing the work, sweat of your brow, but it cannot be W-2. It cannot be W-2. So it has to be something where you're making it not as a paycheck, but they are paying you for your time or your service or your product, and you are receiving that money, and it is not being run through payroll. If that is you, then we can actually have that made through an entity. When I set things up for businesses, I'm always looking at two sides of this. I'm looking at you and I'm looking at the business. And if you are engaged in an activity with third parties where there's any exposure, when I say exposure, I mean risk. Like you could be sued, you could lose money, the business could be held responsible for something. I don't want that coming over to you. I don't want that coming over here. Here's you. I want to create a line between them so that something that happens over here in this business does not come over and affect you. It goes ching and comes right back into that business. It stays inside that business. So that's number one. But because we're doing that, we can choose to have it taxed differently. And let me give you an example. If I was setting up Toby's Pizza Shop, and I said, that's going to be my side gig. I'm going to get a little pizza shop. I saw one for sale down on the corner. I'm going to buy it quick. And I know that I can make $50,000 a year inside that pizza shop. If I did that in my individual name, I would be considered a sole proprietor and it would go on my Schedule C. If I made $50,000, I'm paying 15.3% of that. The math is actually 14.1, but because you get a little bit of a deduction for part of it. But I am going to end up paying $7,500 or thereabout, $7,000 at least, in employment taxes, plus it's being taxed at my highest bracket. Boo. If I have a W-2 job or a spouse who has a W-2 job, that sucks. So I probably do not want to do that. Instead, I may be a corporation. And when I'm a corporation, worst case scenario is I set that up and I let it flow down to me as an S Corp. I'll have to take a small salary, but what it'll do is it'll eliminate about 7,000, well, it's not quite 7,000, but about 5,000, I think is the math, $5,000 of tax savings just by being that S Corp. And I could eliminate it completely if I set it up as a C Corp. I'll have zero personal taxes on that money if I have a C Corp, and I can expense the entirety of what is generated in that business. Now, I know some of you guys are like, 50,000 bucks, how are you going to expense that all? It depends on the business, depends on what your personal situation is. If somebody tells me that you can't, I'm sorry, let's look at your situation. A lot of accountants out there immediately say no. But if you have a child that has medical needs, or a spouse that has medical needs, or a parent that you're taking care of, and those medical needs are high and they qualify as a dependent, then we could actually pay 100% of those expenses. 100%, not 10%, not something over AGI, or 100% of those from that C Corp, and it's tax-free to you. The other thing that C Corp can do is it can pay for an administrative office in your home, tax-free 100%. And before you say, oh, I've heard about that, it's $5 a square foot. No, that is what sole proprietors get when they do their home office. That is not what we're talking about. When you're an employee of an organization, the rules are different. You don't have to report it. The employer writes it off, and it's a substantial sum of money. It's usually about 20% of the indirect cost of a typical 3-bedroom, 2-bathroom home. Is a big chunk of that comes out tax-free. We can also use the Augusta rule, which is 288. We can have corporate meetings in your home, tax-free to you, and it's deductible to the corporation. And before you say, oh wait, that's not going to be much either, call your local hotels and find out how much it costs to get a meeting space for a day in their hotel, and then tell me that I'm crazy. It usually ends up being, and on average, somewhere around $20,000 to $30,000 of expenses. On average, you could be higher, you could be slightly lower, but whatever the case, we can get that money in a avenue where you are not getting hit on the tax. Worst case scenario, leave it in the corp at 21% and accumulate money in there, and that becomes your family corp to grow and grow and grow, and it's in your business anyway, which is growing. But let's just say that we are able to, hey, we have $20,000 of expenses, and we have a business that generates magically $20,000 of gross income on an annual basis. And that corporate, we'll make it an S or a C. So I'm going to put a C and S because it doesn't matter. As long as it's a corporation, I can be considered an employee of that organization. And now it can reimburse me. Actually, I'll do it over here. It can reimburse me under what's called an accountable plan. Sorry for my handwriting. It's called an accountable plan, where it is reimbursing expenses you as the employee are incurring for the benefit of that business. So again, let's say that you set up a side gig business. So we're just going to call it internet. You set up a business where you are advising people on how to make their cats less stressed. I don't care what it is. There's all sorts of stuff that we've seen out there. Felting, I've never heard of that before, makes $100,000 a year. Taking care of backyard chickens, lots of money. People do all sorts of stuff. But let's just say you manage to generate $20,000 on the side in your side business, whatever it may be. Things that you are already incurring, and I'll use the example of a cell phone. If I use that for the benefit of the business, I can reimburse in its entirety the costs that I incurred as the employee. And any employer could actually do this. They could walk up and say, we are going to reimburse all of our employees for the use of their cell phones because we require that they answer their cell phones after hours or when they're away from work. And because of that, the business is getting a benefit. We're going to reimburse 100%. and I want to use your office. I want to have an administrative office in your home, and I want to use your home for corporate meetings, and I want to make sure that I have internet, and I want to make sure that I have things like computers, things because it's an internet business, and business didn't have any money to buy anything, so it's using yours as the employee, so it's going to reimburse you. I could get that entirety, the entire $20,000 out. It's deductible to the business, and you do not have to report it anywhere. So this is the joke. Where does it show up on your 1040? It doesn't. Like, what line is it on your 1040? Not, because I don't have to report it. That's how accountable plans work. And if you don't believe me, just think of every W-2 job when they said, hey, bring in some pizzas, or go get some donuts, or here's some money, go get something, or I'll reimburse you when you get back. Where did you report that on your 1040? Because the answer is you didn't. The business files a return and reports the expense. As the recipient under an accountable plan, you have no obligation to include it in your wages, or there's not subject to employment taxes. It doesn't get reported anywhere. So there we have a tax-free side gig. That $20,000 is worth about $30,000 of wages. So you can actually make less and keep more. And that's what it's about. You don't have to work harder, you just have to work smarter. And this works like a charm. Doing it for 20 plus years. People have been doing it for a lot longer than that. And good accountants and good attorneys know exactly how it works. And if you don't have any good attorneys or good accountants, give us a call. We'll explain how it will work in your situation, in your state, and based off of your facts. But there are plenty of ways to write things off that you're probably already occurring. And that's why everybody who is a W-2 employee would probably benefit from a tax-free side gig, because since the Tax Cut and Jobs Act, unreimbursed business expenses, you can't write them off. You're writing off the standard deduction anyway. You may as well get some tax-free money in your pocket, and that's a lot better way than going up and picking up that third job or that second job. Create your own job. That's a tax-free job. Good luck.